Hi everyone, this is Kush, and this is our Future State podcast, episode 2.
If I have to introduce myself, I'm co-founder and CEO of BCube.ai. Founded my first startup like when I was 16. I had like a couple of years at Morgan Stanley. I was thinking of my next big thing.
Hi everyone, this is Kush, and this is our Future State podcast.
Being here, thanks for having me.
Absolutely, pleasure
So,
is all mine. Yeah.
thank you. If I have to introduce myself, I'm co-founder and CEO of BCube.ai and also B3X.ai. So I have two projects currently that I'm working on. Um, a brief introduction about myself. So I founded my first startup like when I was 16. So that was in stock markets where we were automating the trades using SMS. So that was the time when I came in touch with one very good friend of mine during my pre-university times. And later on, he went on to build a router protocol as one of the co-founders, Chandan. So
Okay.
then, yeah, we both were in the same pre-university. So he was the guy who brought me to the stock market at the first place, and then I made my first company, which was super successful. And after that company got finished, I was also finishing my engineering. So then I had like a couple of years at Morgan Stanley, and then I was thinking of my next big thing, what it is going to be. So then at this time, one business came to my mind, and that was not so popular business for anyone to do, but there was a crypto element in that. So what we were doing was to import bioorganic foods from India and selling it here in Europe by accepting crypto as the payment. So we were the
Interesting.
first people to make it possible for someone to buy food with crypto, and we were selling like many different types of exotic things, which was very much uh, needed and necessary here in Europe, but they're very expensive. Like for example, turmeric powder, and what we call here as curcuma powder, um, and cumin seeds, some kinds of very exotic oils, what they use here in the therapeutic way. So this is what we were doing it, and we were accepting the payments in Bitcoin and Ethereum. So this is how we started with that, and we ended up mining a lot of Bitcoins and Ethereums. So we are in the space for more than 10 years. So we have seen multiple bull and bear cycles. Then we founded BCube.ai in 2017. So that's when we started to do research and development, because my co-founder comes from University Paris-Saclay, which is regarded as number one in maths in the whole world. So he and his research laboratories and everybody came together, and we were discussing about this problem of automating the trades using AI, um, and properly selecting the trades for executing the trades like in a way that most of the time you should win. But in the initial phase, just like everybody else, we were coming out with very naive approach, like using LSTM models and like very naive models. But none of those things were really working. Like manual trading was making more money than using any sort of AI. Then we started to implement like machine learning techniques, which was unfortunately overfitting the models,
Hmm.
which means like it tries to work exactly like how the markets have functioned in the past. So
Hmm.
that approach was also not very lucrative for us. And then like in 2018, like we brought in the quantitative finance dean of the university of University Paris-Saclay.
Okay.
Then he went through all of our research, like what we did so far, like what type of models we employed and what type of experiments that we did, why something was very closer to the solution and why something completely bombed. So then we had a very deep conversation about that. And then we came to know like unlike stock market experience that I had vastly before, that in crypto markets, it's not just about price, volume, and all these things. It's also about exogenous data,
Right.
like for example sentiment analysis, or
Right.
like blockchain analytics. like what are the wallets that is holding, and these are subsets of sentiments in another way if we have to interpret it. So whale wallet movements, and there are many other things that happens, like the hash rate, and when the halving is happening afterwards, like how much circulation is going on in the market and what is the demand for that one. So there are like several things like this is where like we started to do more intense research on.
Hmm.
And it took us like 1.5 years to come out with a kind of product like what we felt is good and it's better than our own trading. So we made the product live in 2019. So
Hmm.
until 2021, we were, like commercializing only one product. We just had only one product, which was perfectly working, and everybody were loving it, which
Hmm.
was a Bitcoin accumulation strategy. So the goal was not to make $100, $110. The goal was to make one BTC, 1.5 BTC. So it was
Hmm.
purely a BTC accumulation strategy. So from 2019 to 2021, we reached a MRR of around 40,000 euros. Plus, like we were getting like several other revenue streams from exchanges and everything. So we were making something like $500,000 in ARR, if we have to speak about that sense. So we
Got it.
scaled very fast. We accumulated a lot of customers. We built all the community actively. No, with those times we didn't have ZLE or Galaxy, or we would not have used it also, because
Right.
these platforms just brings numbers, but they don't bring any value.
No
But
volume as well. Yeah.
yeah, but what we did was like writing articles on Medium post, trying to partner with those people who are really interested in quantitative finance, really
Hmm.
interested in data science, and really interested in that those type of researchers like who are still trying to do some research, like where they can add value to us and we can add value to their research. So this is
Right.
where like we got in the first batch of quantitative finance nerds on board.
Got it.
So once they
Hmm.
came in, they were trying and testing, and they were saying like, "Wow, like your product is good. Like it really works. We have been, trying for 3 months, and it's good." So something had to fail, like that would have failed long back, but it's not happening. So that's great. And then we started with a lot of different type of referral programs and everything among that. So that's how we got in the scientific community at first. And once we got the scientific community, then we went to more broad and mainstream of going and getting customers from different angles. And then, like in 2022, we came out with a very groundbreaking technology, which we filed patents in Europe, US, and everywhere else. So and because at this point in time, like we were facing another problem, that when we have like a single type of strategy that works, like when markets are purely trend following in a bull market, or
Right.
if the market is like bearish, like if it's falling down from the peak, then mean reversion strategies works because everything will revert back to the mean price.
Yeah.
But we had like kind of swing markets, momentum based markets,
Hmm.
kangaroo markets, like we were calling it, like with so many funny names in crypto, like because there was not a real trend.
Right.
So now the biggest challenge was like, how do you predict the trend and what is
Hmm.
going to happen? Because honestly,
Correct.
next 5 minutes, what's going to happen in crypto, we don't know. I don't know personally. Maybe someone else knows, but I don't know personally what's going to happen next minute.
Yeah.
So how do we prepare ourselves for such kind of markets, which is not visible to the eyes?
Right.
So this is where like we were doing this research from 2019 itself, like and in 2022, finally we could come out with that. So it took us 3 years to develop this technology, wherein because if you go on the marketplace, if you see our products, like we have one of the most successful strategies, like continuously delivering for many years.
Yeah.
And the reason and secret of that success is that we don't specifically try to come out with one algorithm or a set of algorithms or
Hmm.
one type of markets. We try to have strategies which is having mean reversion in it, something which is trend following, momentum based, sentiment based, different types of things, right? Exogenous data, endogenous data, along with the quant data, many different stuff. And what AI is doing here is like trying to create thousands of variations of all this strategy,
Hmm.
trying to create permutation and combinations of this strategy,
Hmm.
and trying to pick those strategy that is relevant for the current market condition, depending on the last 30-45 days of data. So
Right.
very immediate data.
Hmm.
Because on the long data, like mathematically it looks very stretched, and we will not be able to make any
Sense.
tangible,
Yeah.
sense out of it. Yeah, exactly. So,
Mm.
but when you go in the nearest data, then your horizon of trading, if it's also very nearby, then
Right.
last 45, 30 days of look back period will really work.
Mm.
And that's been our secret of success. And then like in 2022, like we started with getting regulated, and in 2021 but 2024 finally we got regulated as
Mm.
a virtual service asset provider. So with this one we can be custodian, we can be a market maker, we can be a OTC provider, we can be a brokerage, we can do several things with this one. So that's where we stand, and we were looking for like our next adventure, like what we will do something big.
Mm.
uh, that's when we came to know that there are a lot of inefficiencies and a lot of things that needs to change, and the industry is becoming quite a dinosaur when we speak about
Yeah.
perpetual trading.
Yeah.
so
Absolutely.
so we wanted to disrupt this space. So
Mm.
that's why we came to B3X.ai, which is disrupting this perpetual trading decks in a totally different way. We can speak about that later on, but
Yeah.
yeah, that's it, like about my big introduction.
Yeah, fantastic. So first of all, we all are chasing for market inefficiencies because that's where the gap exists and that's where the opportunities are, right? But I think this introduction has definitely given me several key pointers. Number one is you started with equity markets, trading in equity markets, and of course Chandan from I think
Louder.
yeah, Chandan from Router. Yeah, so he's been a good friend. So I just recognize that now you also know him. So that's fantastic. And the second point is then you started into the e-commerce with the Bitcoin angle, because back in 2016 to 2019 it was all about Bitcoin. It was not cryptocurrencies, right? So that is one. That is the second point. And the third one is now you are getting into the agentic life cycle of managing the risk, time bound risk. Okay, let's dive deep into the equity journey. Like, where, how did you get started? Like, what were the key inflection points when you quickly picked it up? What were the key trades that you had which led you to actually jump into the equity markets? And was it Indian equity market or it was global?
Initially, it was Indian equity market because I was born in India and I was born in Bangalore city. By the way, I got myself educated in Ramaya Institute of Technology. So that's where all the journey of mine begin. Although I don't live there for 15 years now, so but that's my roots, and that's where I was. Why my interest started to be in stock market was because I love numbers from the very beginning, and I was always feeling like there is something behind all these prizes that we see, and prizes were not really something which was interesting to me. The value was more interesting to me. So price and value are two different things.
Yeah,
When we speak about prices, like prices goes up and down, but the value always remains the same. It's
right.
like any project or company can have whatever the share price or token price today, and tomorrow it can crash for some reason. But the company will have same number of employees, same number of talent, same number of IP, same number of products, same number of users. So nothing is changing there on that one.
Yeah, at
That's
least in at the hindsight, companies, for companies, if the right talent exists, the right IP exists, actually it's compounding at the back end. But the
yeah,
pricing, the market pricing is not the reflection of what's compounding intrinsically versus extrinsically, right? So this
exactly.
is a very fascinating concept in the share markets.
Yeah, exactly. So what happened was like, of course, I was very intrigued by these numbers, as I said,
Mhm.
and I was also into like making a lot of research on companies, like understanding that what is the future prospect and everything. Back in those times when I came to stock markets in around like 2000 2022, um, the story of Indian growth was spoken by almost everybody because the
Yeah.
softwares came in 2000 around that moment to India. It was very new, and we
Mm.
had such an enormous amount of talent in India,
Mm.
especially in
Yeah.
softwares. Like
Mm.
even today, I think like when it comes to softwares, like India always figures number one. Um,
Mm.
because like there is not big software industries here in Europe, to be very honest. So
Yes.
most of the people coming here are talents who are coming from India or Asia or like from United States. There is no software talents here in Europe. Europe is good for so many things like industries, making planes and everything. Pure
Yeah.
software, there is nothing. There is only like two, three companies that I can mention, like SAP or Dassault Systems, something like that. But besides that, you cannot even mention any other things like here. So
Hmm.
I saw that potential in India. Like the economy is growing, the talent is huge, so we need to invest in something. So that's how the story, behind like why I came to stock markets. But when I came there, I was seeing huge amount of data there. I mean, like after the trading gets finished, there is something called as bow copy,
Yes.
which exchanges you can copy, which you can download on nseindia.com. So I used to
Yeah.
copy this one, and I was trying to see like, okay, where was the bulk deals happening and block deals happening, and what was
Hmm.
the kind of impact that had on the price. Sometimes I was seeing like some kind of big bulls, like how we have micro strategy for Bitcoin. We
For
used to
Bitcoin.
have, yeah, we used to have Rakesh Junjunwala for the stocks. So
Yeah.
if Rakesh is buying something, then that was looked as something very big, and everybody were buying into it. For
Right.
example, when he bought Hexaware, I bought into Hexaware.
Hmm.
When he bought into like some of the very Prague Industries, like I bought into Prague Industries.
Yeah.
So
Prague
these,
Industries was very lucrative opportunity back in, I think, 2013, 14.
yeah,
Uh, are you talking about that time zone or back
yeah.
even that?
Even before also,
Okay, because
2013.
so like help me understand. I'm kind of distracting a little bit here, but were you using screener.in for equity market understanding, or what kind of tools you were using back then? Because
No,
uh, because
yeah.
I'll tell you, because I started trading back in 2020, 2011. It
Mhm.
was my first year of my college, and I got fascinated by the same value concept, but I got excited by the profit component. So I knew I want to learn about businesses, but share market is something, an extrapolated version of businesses, how they are doing on a quarterly basis in India, right? Either it just exaggerate by 2x or 3x in the, it just reflects in the market, in the price volume chart, or it just dips badly, right? So I used to do a lot of screener.in. I used to look at a lot of NSE data and try to, like, organize, okay, who are the major like investors, like whether they are foreign investors or domestic investors. So these kind of things I used to look. So yeah.
Yeah, actually, I was not using these kind of softwares for a simple reason that I didn't even know that they existed. Or
Okay. Yeah.
I didn't know, like back in 2000, 2001, they even existed. Probably yes.
No,
Uh,
no, probably not. Probably not. It was very
Probably
early. Yeah.
not. The only thing that we had back then was like 5paisa.com, which became ShareCan later on.
Hmm.
So it was not even ShareCan, it was called as 5paisa.com. And they had a very attractive feature of sending an SMS for
Hmm.
everybody to look at the price increases, alert systems like what we call
Alert
today.
systems. Yeah.
Yeah,
Yeah. Yeah.
they used to call as like something, they had like a very unique name for that, like 5 paisa tips or something. That actually that gave me a concept of like, okay, SMS is like cheap, and
Hmm.
SMS is coming, and like why we cannot automate it, it's using trades using SMS. Like, that's how the idea came to me actually initially. So that
Yeah.
led to my first company. When I was thinking about this one, yeah, like I mean, money aspect is also there, of course. Like we are not doing it for charitable reasons or something, but
Right.
for me, like what was intriguing was like to make some kind of relation between these data that I had and to the price increase. And I was
Hmm.
also trying to see like whether it's the value that increases the price or price that increases the value.
Yeah.
So this was a very difficult question to answer, because
Hmm.
in crypto it's the price which increases the value, because
Hmm.
you will not find value so much in any of the crypto companies that you have, very honestly saying that. But in stock market it works very differently, because if there is value there, price discovery will happen. But in
Hmm.
crypto, price discovery will happen first, and they have to chase the value to that price level later on. So that's the fundamental difference what I see between the traditional finance and the crypto finance.
Crypto.
And what was the interesting fact was, like I always used to choose companies like which was the next big thing. And I
Hmm.
made like a couple of very great investments. For example, one of the thing was Task Pharma, which was also called as Markson's Pharma later on. I bought
Okay.
something like $3, a lot of good quantity, and I sold it something like $350. So I made like literally like 100x, more than 100x on that.
Interesting. Very interesting.
Yeah, and the only reason why I bought into Tusk Pharma, which now it's called as Markson's Pharma, that
Hmm.
the founder was the same founder like who was involved with a couple of big pharmaceutical companies such as GSK and other things. So that
So they
was
are
my
based on US.
yeah.
JSK is based on, yeah,
Yeah,
makes
yeah, yeah.
sense.
So that was like very important for me, like because if the same founder and if the same people are behind it, then definitely they are going to do something out of it. And there were also like a couple of foreign companies. They were listed on Indian stock exchange, like Whirlpool and this kind of stocks, like which nobody were buying it. It was very illiquid. And
Yeah.
Lakshmi Machine Tools, these kind of stocks, like which went into five figures. But when I bought, it
Hmm.
was not in five figures at all. So
Hmm.
these were some of my very early picks,
Hmm.
like 20 years ago or like something like that. So that
Very
was
interesting. I have one question, Guru, here. So, unlike stock markets, the DeFi or the highly volatile crypto market is very different. It's pretty much driven by price. So, as you mentioned it correctly, the price is actually determining the value. Unlike in the equity markets, right, where value is actually driving the price. Now, how should I think about it? Like, does it mean that equity markets is very old, let's say 100 years old, right? And that is the reason why it has conditioned so well that people have implemented multiple frameworks, multiple checks on top of equity markets or maybe commodities or even future and options, right? That people are now like conditioned to think in that particular way, unlike crypto where it's very new, less than a decade, I would say over a decade almost now, right? And then people are still figuring it out because of multivariate factors or parameters, I would say, like sentiment analysis, on-chain analytics, which type of wallets are involved, whether they are bots or actual wallets, whether they are market makers at the back end. So like why don't we talk about this aspect of it, because now we are actually transitioning from equities, your background, to the crypto, and I want to learn especially about how people are thinking at a operator level. Let's say you're a market maker, investor, entrepreneur, right? And what is actually happening in the space, because still crypto is so fickle that not fickle I would say, but I would say so volatile because of the sentiments happening. People are just talking random things about crypto, right? That it's failing over and over again to build that trust. Of course it will take some time, but that is a reality right now.
Yeah, the very simple answer is if you see traditional markets
Hmm.
or like traditional companies, if they are raising money, then it's all dependent on the fundamentals.
Hmm.
There are frauds. I'm not saying no. We have seen Enron. We have seen like several other very great scams happening in traditional finance also, but they just happen once in a blue moon. But in crypto, there is one scam every day, and the reason is that the tokens have to be defined properly.
Hmm.
Um, Nobody knows what actually is a token. It's
Hmm.
not binding to a company, honestly. It's just a kind of like casino chips, which is being used only within your own ecosystem. So it's 99% of the time, it's just a medium to raise money. Otherwise, there is no other real use case for the cryptos.
Yeah.
And
Hmm.
there is no use case beyond their own ecosystem until and
Hmm.
unless we are speaking about Bitcoin or something like that. Because Bitcoin is very different from all the other cryptos, what we have.
Right.
Bitcoin is
Hmm.
Bitcoin. It's completely a different story. So I'm just keeping Bitcoin out of it. So Bitcoin is a reserve for many countries across the world,
Yeah.
like El Salvador has, and even US is thinking about it. Like
Hmm.
many countries, like they are willing to purchase Bitcoin to keep it as a reserve. It's
Yeah.
something like digital gold, right?
Yeah.
Um, but when we are speaking about other cryptos, they're very different. And these companies, if you go to DeFi Llama, for example, on DeFi Llama, if you see the revenues of many of the DeFi protocols, they're making $100 revenues,
Yeah.
and their market cap is like 100 million.
Yeah.
Why they even deserve it?
Doesn't make sense. Yeah.
It doesn't make sense at all. And the problem is like there are couple of big name VCs.
Hmm.
who back and actively support these kind of scams. In the sense, like, they know something is not worth so much. They put in the money, they create the hype for them, they create everything for. I mean, like recently also we saw one of the very big L2s that got listed was nothing but a rip-off or basically it was just a kind of like it was the same chain in another name.
Hmm.
So it was going viral everywhere, and like now even they accepted it. So it's not an L2 or something. It's just a fork of another
Yeah.
L1. So we have seen these things happening, and where was the DD team? What were they doing really? And there are no DDs for these kind of scams because they are involved actively in that. So in this space, the problem is that everybody is trying to exploit each other. Everybody
Hmm.
is trying to make as much money as possible before everything gets so serious, like a traditional finance kind of a setup. So it's
Hmm.
like, let it become so serious like traditional finance, and then we will think about it. But right now is the time that we can milk as much money as possible from each other.
Yeah,
So what
makes
is
sense.
happening? VCs are funding these kind of startups,
Hmm.
creating hype for them. And then what is happening? Then a big, market maker will come into the picture. He will provide a huge number of liquidity. The marketing is there, and people are not innocent, but they have become slightly even stupid in Web3. So they are also going with narratives. They are also going with all these things. We have seen what happened in meme coins quite recently, right?
Right. Yeah.
uh, that guy like Murad, who was like the poster boy of meme coins.
Meme coins.
um, he made $30 million. He sold all his meme tokens on a OTC quite recently, and now he doesn't speak about that. And people were still believing in him. So
Hmm.
they all these things like are happening because people are very greedy, and their greed is leading them to this kind of misery now. And who wins? The investors win. The very big VCs who are putting in money, knowing like it's just a very ordinary thing, and those project founders are making money. Market
Makes
makers make money, exchanges makes money, everybody makes money, and only people who are losing is retail investors. And the day they
retail.
think about it, this industry will become more serious.
So I this brought me to two questions. Number one is, uh, are investors, including VCs and retail investors, and then market makers, are they cognizant of the fact that this is a more like a casino game, and we might be losing money, but at the end of the day, we have to make money as quick as possible. Number one, and number two is, while we are looking at this whole spectrum of multiple coins, especially now, Bitcoin is maturing into Bitcoin ETFs, where the custody is held by some custodians, and major retail investors are coming into the picture, right? Do you think these two instances connecting any dots and pushing the whole ecosystem towards maturity or not?
As of now, to be honest, like this is not still happening. I mean, like you see, Kush as a person and Guru as a person, we have a different outlook for this industry. We
Hmm.
want this industry to be more sane, and we want this industry to be accepted by everybody, taken it seriously, bring some productivity out of it. We want to see this industry flourishing, very honestly speaking,
Hmm.
right? This is our intention because
Hmm.
we think with a very clean perspective. But by seeing what's going on in this industry, like leading exchanges are still listing meme tokens,
Yeah.
um, despite knowing that it's going to end very badly for their users. And the same centralized exchanges are delisting the meme tokens now after 2 months of listing, when they came to know, like, okay, there is no more flavor in that.
Right.
So when we have that kind of a mindset, we cannot speak about onboarding the next billion people on chain
No,
because
I'm not at all interested anymore onboarding next billion users. To be very honest, my thought process here is kind of, now I have started thinking very linearly from a consumer perspective. Let me give you an example. Okay, in India, SEBI is regulating entire share markets, equity market, because they have oriented themselves for retail audiences, retail investors. If you are not preserving retail investors' interest, I'm gonna charge you. I'm gonna, like, uh, put imposed taxations, more everything, every conditions, right? However, on the other side, in America, in US, SEC is actually not imposing conditions on retail, on companies who are not profitable. They can still go, like they can still go public and run their entire game, right? Now here the whole gamut or the user base has expanded to the entire globe, right? Now we do not exactly know what retail investors are looking for, right? They can be Southeast Asian who are gambling first, they can be African gambling first, uh, maybe US, Europe, maybe value first, ticket size first, margins, etc. Maybe India, Asia, China, ticket margins first. But still, the whole spectrum of consumer persona is not very well defined in crypto. Maybe this is the reason why no one is able to impose conditional regulation, and that's why NFTs, coins, or memes are coming every season and kind of siphoning the retail money, right, towards institutions. Isn't it happening, right? Don't you think so?
I think you see, like on one side, I understand that from what you said, that we need to have regulations, and on another side, like I'm seeing, like we don't need to have regulations. That is a kind of understanding I get based on what you said about the example of how SEBI goes after everything and how SEC is not going after anything,
Not going after everything.
even if company is not profitable and everything. Look, this regulated or unregulated is a very different argument, because it has both pros and cons in that one. Um, we went through a regulatory trouble with one of the Western European countries. Like, what name? I cannot still take it for one more year as per our deal. So we had a lot of torture from them. They were literally going after us for nothing. First of all, they were not giving us any clarity. And once we were asking for it, like there were like three different officers saying three different things. The first person gave us the clean sheet. The second person said, like, no, you are not clean yet. I am handling your case now. And the third person was like, not able to make decisions, so he just gave it to the second person and he went. And second person said, like, okay, like, okay, I will give you the clean sheet, but I will come back to you after a few months and I will have a chat with you. And after giving the clean sheet for the second time, they came back to us after 3 months, knocking our doors, and they stopped our business absolutely for 18 months.
Okay.
And this is when we ourselves voluntarily wanted to get regulated. And the reason what they were telling was that our operations was already live even before we applied for the license. And the same definition will apply for even Binance, which was operating in the same country. They didn't have any license. Fully fledged operations was going on. But they were not asked the same question, like why your operations was going on in this country even before you secured any kind of license. But we were the only people who got this trouble because we are not as big as Binance. So that is one thing. So you see, like even in Western European country, this level of problems exist when we are speaking about regulations. Like we go ourselves to get regulated and we get into this problem, and the laws are not the same for everybody. If you're a bigger company, you have a different rules. If you're a smaller company, yes, you need to go by the books. So these problems are existing even here. What I'm trying to say is,
Okay.
so
Very interesting.
regulations, personally speaking, it's good and bad. Even in my own personal opinion, it's good because like there will be some amount of fear for everybody, which will make industry more sane, and which will make industry more clean, and even like other players will feel more secure to deal with this industry.
Yeah.
If you say like you're a regulated entity, like okay, like I can make a check to you, because if you defraud or if you do something wrong with me, then I can complain to the regulator who have all your informations and they can punish you. So there is a kind of like assumption that if you're regulated, which means like you're clean in many ways, otherwise you will not get that status.
Hmm.
So in that way it's good, but it's bad in another way, because innovation will not happen, because
But
every
innovation has nothing to do with the regulation, right?
it is imagine, like, for example, you would like to bring a completely privacy focused crypto blockchain, or privacy focused perpetual dex, or privacy focused coin like Monero, Zcash, or something. These
Okay.
are completely illegal and banned in European Union.
Hmm.
Here in exchanges, you will never find Zcash, Dash, Monero, or like any of those private privacy coins that you have. And
Hmm.
anything that deals with privacy is illegal. In the sense, like, crypto is involved, and you are not making it possible for anybody to know who is that person.
Hmm.
So KYC becomes mandatory when you deal with finance.
Yeah, so then there is a discrepancy here, because when we talk about crypto as a currency, as a tradable asset, that's when
Hmm.
the problem is surfacing. Because unlike a currency, if it's a technology and if it is being embedded in the European, let's say, space, right, then Europe is pretty much welcoming that. For example, there is a massive consumer data on car operating systems. Cars are operating, and they are consuming a lot of data, they are ingesting a lot of consumer data. When you're stopping the car, when you're buying XYZ, where you are buying, location, what is the temperature, everything. Right now, there are multiple companies or innovation startups popping up, which are leveraging on this consumer data and personalizing your lifestyle. You know what I mean?
Hmm.
In Europe. And Europe is adapting to this, which is privacy first, which is consumer first. But when it comes to implementing a currency or an equity business, or let's say, or a token business, which is tradable, right? That's when Europe is kind of flipping it up. So does it mean that the structure, the orientation is not clear to the regulators, or they are just kind of leveraging the money game when it comes to trading, because they know whoever is trading is actually looking for high margins, and that's where I will earn. Is it happening reality, or because I want to learn from you, because you have been into the state, Europe, and you have been looking at US, India, multiple economies, and different spaces like car OS I just shared with you, right? uh, that's a different space as compared to the trading, because trading, people want to impose more regulations, people want to mint more money. So that's where I'm trying to understand what's exactly happening.
Yeah. First of all, like consumer data, what you just mentioned about the car thing, it will be outrightly illegal if they are not following the GDPR law.
They
Uh,
are, they are GDPR compliant. They are
GDPR compliant, then there is no issue. Uh, because like here, for many years, actually, even before GDPR came, at least like half of Europe banned Google Analytics. So we
hmm,
can't use Google Analytics in European Union, because that
interesting.
that is not GDPR compliant.
Hmm,
In case, as a Italian company, for example, or a French company, like if we are having Google Analytics, there is a watchdog for checking
yeah.
all these things. And if they come to know it's a government organization, then they will find something like 20% of the revenues of the company, uh, and plus like six figures euros as a fine. So that will also come with imprisonment, and there is like very strict law about consumer protection. So
Hmm,
this is one thing, and if it is GDPR compliant, then there is no issue at all. Completely we can use that, because there are a lot of Google Analytics alternatives which is GDPR compliant, for example Plausible and these kind of apps. So this
understood.
is one thing. And when it comes to crypto, um, the first thing is like we need to understand something, that some of the largest economies in the world are here. And US dollar is like very well accepted everywhere, and the international global trades happens in US dollars for the purchase of oil or gold or everything.
Hmm,
And Probably the second thing would be like Chinese currency or Japanese yen, which is like most, like traded.
Traded, yeah.
Yeah. And coming to the third spot, it is undoubtedly euros, which is there currently. Because even in the Middle East, like Dubai and other kind of places, like now they started to trade with euros also. So what happens is like they don't want that monopoly to go away, because they think it in a very serious way here in Europe. Like they don't want anything to be replaced by something
Hmm.
else which they don't know.
Yeah.
Because the European Financial Commission, they were very, 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 very positive about Bitcoin few years ago.
Hmm.
Like I'm speaking something like 9 years ago, 2015. They were very, very positive about it. They were even
Okay.
Christine Lagarde was saying a lot of nice things about crypto.
Hmm.
But then later on, after seeing like how fast the adoption was happening here in Europe, like with a lot of Bitcoin ATMs, which
Okay.
popped up every single country, then
Hmm.
they felt like, no, now it's going a little bit out of hand. Like now we need to regulate it. So then the regulations and everything came. But still, broadly, a lot of people don't trust this one, and they don't understand that. They're very old, but old people need to be wise, but that's not the fact here. So they're they're
Hmm.
they're old, and they are like very opinionated about everything that is new, and they don't know what is Bitcoin and how it functions and what it can really do, and they don't want to know it also, because they're so
Hmm.
old minded that um, they're just comfortable with all the fiat and not really with cryptos. So that is the problem in European Union, that they don't want to get themselves educated about it. Because a lot of times, like when big conferences are happening here in Europe, there some ministers or someone is invited so that they come to know about it. They will have discussion with community to understand a little bit about technology. Some
Yeah.
countries have been very successful in that. Like for example, Italy has been very successful, France has been very successful, even Czech Republic has been very successful, because Czech Republic is also planning to do something like El Salvador, adding a little
Hmm.
bit of Bitcoin to their reserve. So these people are like a bit more open minded to at least give you a chance to talk what you want to say about Bitcoin and to accept it. But that's not the case, broadly speaking, in Europe.
Okay. One question. Very, very interesting conversation. Okay. One question. Uh, why they are not launching their own stable coins like USDT or USDC?
I think they are not technologically so advanced. The people who are in the power, these
Hmm.
things, what we are talking now, these are very trendy among the young people. And
But
crypto,
as you mentioned, sorry to interrupt, France is taking interest now. France is definitely a superpower as compared to Europe, as compared to US, China, Russia, India, etc., etc., right? France literally understand the entire power dynamics between Europe, US, China, everything, right? Even Russia. It's little bit difficult for me to comprehend that France is not adopting because they do not understand. So it should be very obvious for them to launch a stablecoin. I'm just asking you. I'm not trying to uh, stop you, but sorry for this entire thing because I want to learn about it. If you can answer me, that's fantastic. Otherwise, that's perfectly fine. Because and there is also a constraint. Europe has to bring everyone to their council confidence that okay, this is the stablecoin that we have to launch, but still France can do it. Europe is again binded by this law of state, which is their economy is governed by Europe, euro, as compared to individual France or Britain euros, right? So
hmm,
that's again might be one of the conditions, but yeah.
hmm. Yeah, that's a good question. So when it comes to France, like they're already piloted a project, which was euros on blockchain.
Hmm.
So they were testing this one. um, it has not gone mainstream yet because they haven't made it mainstream also, but they're trying and testing this kind of digital euros as of now.
Hmm.
So what they are doing is like they are putting euros on chain and making use of these euros, like something like CBDC project. But
Yeah.
these things have a lot of other kind of issues also. Like they can block your money. I mean, like if you are receiving it in an online way, they can have a lot of power over it. Because it's like saying like I will not send your crypto, which is your fees to you, so
Hmm.
you will not get it. So there are some questions to be answered there, like how exactly this kind of structure works. Because for a country to implement something, it's not just about technology, it's
Technology.
about
Yeah.
laws, it's about
Yeah.
compliance,
Hmm.
it's about like very broad thinking. And they need to change the constitutional stuff if a new form of like payments or something else is coming, so which has to be passed in a parliament. So if it
Yeah.
has to be passed in a parliament, then just like how we have lower house and upper house, even they
House.
do have like a lower house and upper house, which they call as senate.
Hmm.
So it has to be passed in the lower house and in senate. Sometimes someone can veto it and the entire thing can fall apart.
Yeah.
So it's not that like when it comes to France or UK or something, it's not that they don't understand. They understand, of course
Yeah.
they
Absolutely.
understand.
Yeah.
Yeah, they get it. The point is they want to make it fast, accessible, cheap, and everything is fine. But why they're not doing it is because there are a lot of things that a company, I mean like country, has to implement before making it
Yeah.
happen. I think
Hmm.
it's mostly about the laws, and it's mostly about like passing this kind of laws in the parliament, because
Yeah.
everybody doesn't have this kind of mindset. And when you're speaking specifically about France, it's a very socialist country,
Socialist country. Yeah.
very socialist country. It's
Hmm.
almost like a left wing country. So
Hmm.
left wing countries are completely against money, completely against rich, completely against all these kind of technologies. Because I haven't seen any left party or like left leader like speaking about this kind of stuff. They still
Hmm.
speak about like saving the job, saving this, saving that. um, and even if a company is going completely bankrupt, like some of the government companies in France, they don't want like to downsize the company or something. They are fine like if company is dead, but they don't want like anybody to lose their jobs. So that's why I
So is it
think
very similar to Switzerland, Netherlands structure?
no, it's
Uh,
different in Switzerland and Netherlands, because Switzerland is like very open in digital law and everything. Because Switzerland was first and one of the only countries in entire European Union which welcomed the foundation to hold tokens, and
Hold
that's why
tokens.
you see Ethereum Foundation is based in Switzerland.
Based in Switzerland.
Um,
Yeah.
yeah, a lot of big companies like Tezos is present in Switzerland. So a lot of these billion-dollar companies like DYDX Foundation is also in Switzerland. So a
Okay.
lot of companies are based in Switzerland because they understand these things very well, and that their taxation law is also very good. So they're also like very forward thinking. And then they I don't say they're right wing or left wing, but let me say they're very business positive people. They're very
Hmm.
capitalist oriented people. So I think everything works there because of that. And when it comes to Netherlands, what you mentioned, see, business is not something new to Dutch, because some of the big brands comes from Netherlands, and some of the big companies comes from Netherlands, like
Okay.
Shell, the petrol Shell. Like everybody thinks like it belongs to UK and other no, it belongs to Netherlands. So a lot of big companies comes from Netherlands.
Interesting.
Now it's becoming kind of like a second base for a lot of US companies like Microsoft and other people to establish their
Okay.
companies in Amsterdam. So
Amsterdam.
it's a very small country. It's half the size of Hungary. You can imagine how small it is, but
Yeah.
it produces like I think 5 times, 6 times more than what Hungary produces. So it's very different, and they have very strict laws for crypto. But if you go through all those things, they don't bother you. You can do whatever you want in their country.
Got it.
So their structure is very different than compared to France.
Got it. One last question of for this context. So we looked at it how regulators or lawmaker, policymakers are actually maybe very skeptical about fast changes in the crypto market, right? Unlike US, where US has systematically implemented the stable coin CBDCs systems, right? embedded it with their cards, like digital payment methods, merchants, Visa, network states, everything, right? And they have made it a success story of the crypto. So if you see, like stable coins are the poster boys of crypto stories, right? Because everything is failing, but cryptocurrencies like stable coins. So do you think technical lack of technical innovation or faster adaptation of technology, especially in the fintech space, is leading Europe to lag behind for this, or there is another reason altogether?
I think for everything, it boils down to political will.
Political will.
Yeah, there needs to be political will to bring in those kind of technologies. Because if you ask me, America innovates, China replicates, Europe regulates. This is
Hmm.
what happens all the time. Like even if you see our bottles, like let me show you. You see, like when we open this bottle, it is still sticking here. It doesn't
Hmm.
fall down. See, this was a kind of like new innovation they brought in Europe.
Europe.
um, yeah, because their logic was like if it falls down, then people will just leave it like that, and it results in a lot of garbage and things on the street. But that was not true at all anyway. Like their data was like really awful, because they didn't have any kind of explanation for that. But this is how they are.
No,
they,
I
they
think I think your observation is very peculiar and very right here, because I have observed in Europe, people are very design focused when it comes to how they are experiencing things around them, especially in the closer vicinity. So even if I just open up a, let's say, a yogurt cup, right? Things are very different. Things are very ecstatic as compared to even US. So that's something which I can clearly say that there's a different level of thought process which goes into building consumer products or whatever, right? Like regulation policies. But yeah, I think I totally second your opinion here. Like there's a will on the policymaker side which is actually stopping them to adopt crypto or any sort of kind of thing, because unlike Europe, China launched their CBDCs. Dubai, Russia, they're all experimenting very aggressively with CBDCs. In fact, India is doing massive experimentation on the blockchain CBDC side of the things. So that is one. Yeah, perfect, perfect. Do you want to add something here, or should we like
I
jump
think
to another
I
context?
think like CBDCs will come here also, but like it will be coming slowly, country by country, because not all the countries within European Union has euros also.
Hmm.
Now UK is not part of Europe,
Hmm.
but they have pounds. And now, like when we are speaking about mainland Europe, like in Western Europe, mostly they have euros. But in Scandinavia, like there is Norway, but Norway is not part of European Union. It's part of
Hmm.
European continent. So that's a very
Content.
different thing. And Norway have their own NOK, their own currency.
Okay.
Uh, I think Sweden also have like Swedish kronar. They have their own currency. Czech Republic have their own Czechish kronars. That's a very
Hmm.
different one. Here in Hungary, we have Hungarian forints. And in
Hmm.
Romania, they have RON. Bulgaria, they have their own currency. It's the same like in many of the countries here in European Union. So we don't have a single currency. So
Hmm.
even if there is a CBDC, then it will be adopted only in the Eurozone and not outside the Eurozone. So everybody have to think about it. And what is some of the leaders thought is like, look, it's working so far,
Hmm.
like how it is now. So why we need to change it?
Right.
So that's the kind of mindset they have. But I think like one, if France is successful, I think like the next country to adopt that would be Germany. So they will be coming out with something, because BaFin is also very good regulator. They
Hmm.
don't trouble anybody unnecessarily, and they're very logical and they come straight to the facts. So I think like adoption will happen here, but it's pretty slow.
I think Germany must adopt CBDCs or blockchain technologies in their financial inclusion terms, because of multiple other reasons. I will not speak about it here on our conversation, but Germany has been pretty badly hit by the whole energy transition that they took in the last couple of decades, and for them it will become inevitable to adopt such technologies, because they want to attract, and they are attracting talent resources
Hmm.
capital, funds, innovation. So that's gonna be inevitable. But again, they have to be very, I would say, thoughtful while they are designing their systems, the new digital systems. Yeah,
Yeah.
fantastic. Okay, perfect. Guru, let's very quickly jump to the next section. Like while you were transitioning into from equities to commerce to Bitcoin, right? What were the mindset like? What made you what made you tick?
Well, I think the technology was very fascinating, to say the least. And it was very magical, to be honest. Like how there is some magical wallet, and you send the crypto from one wallet to another one. And those times we were sweating until the
Yeah,
money reaches on another end, because we don't know in between where is it.
yeah,
And if it happens with the bank, for example, with a bank transfer, we can go to the bank and ask the banker, like, where is my money, what's going on? And he can tell, like, okay, it's in the Swift network, it's somewhere here. But in blockchain, like, no, you have the hash key, or the hash, a transaction hash, and you have to look at yourself on Etherscan if you're doing something on Ethereum chain. And you have to track it until it goes there. And sometimes if the wallet address was wrong, and you lost it forever. And even then, like, it's difficult to know, like, okay, you send it to a wrong address and it's gone forever.
yeah,
And once we were mining in the beginning, we lost one of the wallets of the mining machine. So
okay,
there were something like 7 ether. We lost it forever. So all these kind of experiences were happening, and it was very magical to learn something new, which was happening. And the most fascinating part was, of course, one aspect of blockchain that
hmm.
is a very big thing even today. Because if we have to transfer $1 billion from one account to another account, and if we go through a bank, here in Europe, we have a fixed cost for transfer of the bank, for transfer of money from one bank to another one. Plus, we have percentage of that size of the money, what you are doing
Yeah,
also.
hmm.
And if you check that one for $1 billion, you are looking at a very big money to pay.
Yeah,
But imagine you're just using, like, for example, Polygon chain or Arbitrum or Injective or any of these kind of chains, and you're sending $1 billion, and it's
hmm.
going to cost you like 3 cents or probably like 5 cents, which is
Take $10. Take $10.
take
Why would I
$10.
bother? Why would I bother to transfer 10 billion? Let's say $10 million at a cost of $10, right?
Yeah,
Doesn't
that's
move anything for me.
exactly that's something very, very, very magical. I mean, like, you can move the money at the speed of light,
Yeah,
literally speaking, because the bank takes like 1 week, 10 days sometimes, if it's one country to another one outside of their continent.
yeah,
Although they say 5 working days, sometimes it never appears in 5 days. But think about this wonderful technology, that you can just get your money in your wallet just in few seconds,
yeah.
and you spend
In fact,
fraction of a cost.
yeah. In fact, it was so fascinating for me when I learned about it back in 2016 that I was mesmerized. So I'll tell you why. Because banks are saying that, hey, here's our horse. It will take you to from point A to point B in 2 hours, and you have to comply with that. And then boom, Bitcoin came, and it's like a let's say a motorbike, right? Which is taking you from point A to point B in, let's say, maybe 5 minutes, right?
Hmm.
Why would you take horse, right?
Hmm.
Why would you have to go and follow the similar constraints and the systems that someone has built forever, right? Like banks are operating since I think 1920, 1930s, right? And they are not at all dramatically shifting, not thinking about consumers, everything. So I think Bitcoin has a very special place in my heart, like the whole technology, the whole blockchain thing.
Absolutely. Absolutely.
Yeah, I can clearly get the vibes, Guru, where you decided to jump into this space. Perfect. So okay, let's maybe talk about your like like automated bot. So where is it moving right now? What are the tough challenges that you're solving operationally, maybe next quarter, next year?
Yeah. So we have one of the best AI agents, because we have tried and tested like so many different types of technologies. We have applied like so many different types of approaches. We have failed a lot. We have gained experience from that, and we did something differently always, and we were not scared about failing once again.
Hmm.
So that's the reason like why our AI agents is one of the best ones in the industry, and we don't call them as bots because bots are like pretty stupid in the sense like they just like do something based on the rules which has been defined. Like you if this is the value, like you go long, if this is a value you go short or something like that. So that's what typically a bot does. But what AI agents does is something very different because it needs an endpoints of
Hmm.
data, different types of data and everything. And based
Hmm.
on those endpoints, like it makes its own autonomous decisions. So where there is no human is necessary. Human is necessary only to give inputs to it, but we are
Hmm.
also working on something like where inputs also can be taken by the AI agent itself. The
Hmm.
consumption of the data and synthesis of the data, and making sense out of the data also. So this is what we have built. And actually, our lab project, we have another one which is called as like Bloomberg.ai,
Hmm.
wherein we have a kind of like terminal where you can write your prompts, and we will be able to give you all the information about crypto. We even our AI agent is sending you a newsletter to you once you
Hmm.
subscribe to it every single day
Okay.
in the morning, completely generated by AI. So it makes a
Got it.
news letter like on all the new happenings, latest news, sentiment
Hmm.
news, hash rate, Bitcoin, altcoins data, everything. So it's doing that. And also we
Got it.
have like a reply boy on Twitter. So we have like very extensive experience in building AI agents, and that's what we are using for our trading currently on centralized exchanges. Excuse me. So going forward, like we would like to pivot towards custodian services a lot, and going more towards the B2B side. And
Okay.
that's something like what we are thinking about it now, and going more towards the profit sharing side, because
Hmm.
subscription is not so good business model like how we have seen, because
Hmm.
markets are good and bad. Sometimes your strategies might be very good, but someone is scared that markets are not good, and that's why they
Right.
don't want to interact with you. And when they see market, like they get like really panicked, like markets are
Panic. Yeah.
going down, what's going on here. But if you have the custody, like they don't know what's going on.
Yeah.
And then they will be very peaceful, and like end of the year always you will have better results than watching it on a day-to-day basis.
Day-to-day basis.
Day-to-day basis, like it's very gambling, like one day you can make, another day you can lose, whatever it is. But
Yeah.
over a period of time, like if you see like your wealth always grows, if your strategies and everything else very good. So that's the next thing for BCube. Like we are pivoting towards more B2B side, and doing more custodian services.
Understood. Like, help me one aspect of it. Like, when you've designed this whole algorithm, right? You are looking at sentiment analysis across X and other platforms, or it's still X agnostic.
No, it's taking currently like X, which is Twitter, and Reddit, and Telegram, and
Hmm.
also like some major news medias like CoinDesk, Cointelegraph, and these kind of things.
Understood. And then once we have the sentiment analysis, then you are also looking at the on-chain analytics, which is more of a dunes or something like that, Nansen, right? Nansen level analytics data points.
Yes, but like to be very honest, we don't have Nansen level of analytics built yet completely in house. It's kind of like it's in the very beginning stage.
Got
Uh,
it.
yeah, because it needs a lot of research to really make sense out of it.
Hmm.
Because just to bring in the raw data, yeah, we can do that very easily if it's just
Hmm.
to pull some raw data. But the major challenge that we face even today with the sentiment analysis is the noise, uh, and purifying the noise from the alpha. It's
Hmm.
very very difficult, because we were
Got
doing like literally 1.5 years of data engineering on sentiment data. So
it.
it was
Hmm.
very difficult. So we had to come out with a kind of point system for some kind of accounts, like how many times you say something and how many times it actually comes true,
Okay.
and how many times you say and like how many people interact to it, and is there any difference in the price at that point in time, and
Hmm.
which is the exchange that is like more close to a particular KOL.
Okay.
And what is the kind of like a influencer that we are talking about, because there are influencers who speaks only about NFTs and they don't speak about DeFi.
DeFi,
So
yeah.
yeah, and suddenly if he starts to speak about DeFi, what will be the impact on it? So there is a
Hmm.
lot of study to make, and that's why like um, initially we were thinking like sentiment thing like will be much more easier than what we thought, but no, it was much more difficult than what we thought.
So,
uh,
so is your analytics or data stream working perfectly for short period of time, let's say 5 minutes candles, or it's working well also for, let's say, 1 day candle?
it's working well for like 5 minutes candle as well as 1 day candle as of now.
Okay. Okay,
But
interesting.
like the challenges are like the, like if we have to reach very low latency, then that is
Hmm.
very difficult. Because in
Difficult, yeah.
that, yeah, because in that low latency, you have to run the fact check, you have to run like several other models on the back end
Hmm.
to verify, because maybe there might be some rumors, or there might be some fake news, or there might be some news like which people are still talking about but it's not confirmed yet.
Yeah.
uh, like all this news which is coming in the media about tariffs of Donald Trump,
Right.
50% of that is just like someone making this
Yeah.
news. It's fake news, it's not real,
Yeah.
not
Correct.
coming from the White House. So
Hmm.
that is where we face a challenge, because all these things have to be verified, and many things have to be run on the back end in real time.
Makes
Yeah.
sense.
So if we are speaking about like millisecond or something like that, it's pretty difficult to do it, and we are not there yet.
Hmm.
But if you're speaking about like 5 minutes, 30 minutes candles, or 1 day candle, like yeah, it's fine.
Okay, makes sense. Awesome, awesome. Okay, let's maybe lighten the whole vibes here, because we have gone a little bit intense on the technicals and the whole side of the things. I want to ask you a very funny question right now. So tell me, uh, is it possible that your bot can just long or short when EMAs are crossing over, and will that work perfectly for a noob like me?
Um, we don't use EMAs at all. So if you're asking me about technical indicators, we don't use technical indicators. We have
Not at
some
all.
kind no, we use some kind of math models like what we came out with, and that is
Hmm.
part of our patenting process also. So
Okay.
our patents also have certain kind of formulas that we have made it. Once we get the patent, we will open source everything, and we will make everything available for people once we get the patent. So what we have made is like some kind of correlation studies between different types of cryptos and
Parameters.
parameters, and yeah, like I mean like hyper parameters tuning and all these things, they're already there. But
Hmm.
per se like like exponential moving averages, Bollinger bands, or RSI or something like that, no, we don't use those things.
Okay.
Because our conclusion was that if you're using these kind of things, then you cannot derive alpha for a very long time, because everybody have access to it. So everybody thinks in the same way. Everybody knows
Makes
like buy below this is like, it's very lucrative, and sell above is like, okay, it's in the overbought zone. So
yeah.
oversold, overbought, everybody is using the same thing. So we
But
cannot.
there are subtle nuances, right? But there are subtle nuances within this construct as well. Let's say, let's look at perps, or maybe platforms like our Hyperliquid, right? Where
Hmm,
if it is overbought zone, and I know that MACD is not supporting the buy side of the things, right? Then I can definitely do the short, and I can make, let's say, if I'm doing 5x leverage or 10x leverage, whatever, right? I can actually make certain leverages and make some profits out of that situation, that opportunity, right? So that works, right? Or not? It doesn't work that way.
I don't think it works, because if that was really working, then imagine like actually our devs can bring out a kind of software like in 3 days, 3 to 5 days. Like if I tell them like make a software like which tells me overbought and oversold zones, like using RSI, MACD, Bollinger bands, exponential moving averages, CCI, and couple of other indicators, by adding that one, and then I can just tell them like, okay, like just based on it, like make a prediction to me.
Hmm.
They can do it, but if we follow it, like it will not happen, because if it was so easy, someone would have done it already. and it would be
Yeah.
commercialized, and everybody would be minting money.
But
So
there is a caveat as well, because if someone is already making money, why they will come out in the public and tell about it, right?
yeah, I mean, yeah, like I mean, that's one thing, but we haven't seen that kind of success stories so far using these kind of things, because Renaissance Technologies is the most successful.
Definitely, they are using it. I believe
Um,
so.
I'm not sure really, because Jim Simons had his own math models. Like,
53% year on year, every
yeah,
year for the last 25 years.
yes,
License
yes,
is definitely doing something extraordinary right here in this case.
yeah, because like we had, like, me and my co-founder, we had a connection with someone who were working at Renaissance Technologies. Because when we were in the process of our research, we just wanted to speak to everybody. So
Yeah.
when we are speaking to them, they were not telling exactly what they do or something, obviously, because they have very, very, very one of the most stringent IP laws for every employee. If you speak something, you are finished, and they
Yeah.
know who spoke and how much they spoke. So when we were making some kind of interviews just to understand the fact, because he was the ex PhD student of our scientific advisor, so that's
Okay.
how we got access to him.
Mm.
And what the answer we got was like they use more of statistical models, using it in a very different way, in a very radical way.
Got
Uh,
it.
which the foundations were coming from Jim Simons, of course, but they have like several foundational levels. The foundational layer has been built by Jim Simons that no one knows. So what other quants and what other data scientists are doing is something to build on top of that. There are
Yeah.
different levels to it.
Mhm.
So the basic fundamental layer was always built by Jim Simons, which no one knows. So and technical indicators were never part of our discussion on that day. They were speaking
Okay.
more about like statistical ways to do it, game theory, and several other things. What they were trying to implement it as a model for the
Got it.
stock. Yeah,
Mm.
but they use machine learning. That much we know for sure. They
Mhm.
use also sentiments a lot, and they're not using like Bloomberg or these kind of things, but they build something completely in house. So they use mostly math models, but not something which is established or very well known. I think their alpha comes from there.
Yeah. I'll ask you one last question here for this context. Essentially, when most of the companies are trying to build their own alpha generating mechanisms model, combining multiple aspect or dimensions of what they can think about on top of this price action, right? I have seen very few getting success, and most of them are transitioning towards becoming the data providers like Bloomberg Terminal, right? For businesses. So do you think this is a more of a I think this is a very never ending quest of getting that alpha at a scale level, but very few are able to attain this.
Well, I think it's extremely difficult to obtain alpha always. Even beta strategies are something where very difficult at times.
Yeah.
Um, but what I would like to say is like why people transition is not just because it's difficult to find alpha, but it's also difficult to find LPs, liquidity providers, or like
Providers.
investors in the fund.
Mm.
Um, the problem is like the family officers and everybody, they have a different type of check size. Sometimes it might not fit into your category, so that's why this is some of the problems that we are facing also, because now we want to transition towards B2B. We are also talking to a couple of investors. So one of the VC investors wanted to talk to us, not in VC investment as a startup, but VC investment in the fund, like to manage their fund.
Yeah.
So
AMC. Yeah.
yeah, exactly. So then when we were discussing, like everything was going on fine, and then they said like since they are also a regulated entity, they want us to have our server in their office, in their premises,
Mm.
not on AWS or not with us. They
Yeah.
wanted it to be in their own office.
Mm.
So this will expose some of our IPs to them, potentially. So we were not
Potential.
open to it. So then they were saying like, oh, all right, like then we will think about something else. and and many other things like discussion was not going on fine, because if we are like very big, I mean like 100 million company or something like that, then we can do much more things. But when you're a little bit small, then your bigger peers, then it's not so easy to do all those things. And also like once you get in the money, you have to think like what type of fund you are doing. If it's an open-ended fund, someone new comes today, leave, old person leaves. But to generate alpha, it's always good to have the money and keep it for a certain period of time,
Mm.
because you need to play around, you need to make a portfolio, you need to think about risk management, you need to think about like some hedge. So there are a lot of things that we need to think about when we are speaking about alpha generating strategies. So it's a lot of thing, like we need to like have a lot of contacts to get that kind of funds and everything to run the show. And that's why people get fed up and they think like, look, we have good strategies, we just provide you, we'll just like provide you white label solutions, or we just like distribute it to people like who would like to get it and pay us like some kind of fixed money finally.
Got it. Yeah, very interesting. Very, very interesting. I think you are in a very fascinating space. Risk is something which fascinates me a lot. I have been trying to understand it. It's been over a decade already, but I still fall a lot short on that side. I have couple of questions, like more of a, like from a operator perspective in the crypto space. Like you are seeing price actions, and whenever we are running a business, we have raised funds from investors, we have some person shareholders to answer, whom we are answerable to, right? Whenever the prices are moving up and down, right, and especially price movement actually decides our runway in crypto space, right? What do you, how you behave, how you react to such situations?
Well, I think as a company, no one should think about the price of the token.
No, but that inevitably hurts you, right? Like uh, directly, indirectly, it impacts you, right? Because either you are allocated in that business, in that ecosystem. Let's say Ethereum, for instance. Ethereum has been hyped so badly, you know. Uh, Besides its very strong roots uh, on the institution side, developers wanting to build on Ethereum, but if you see, the prices are dumping. Number one, they are trying to deploy multiple strategies like bringing AI, smart contracts over and over. So if you see for the last 7 8 years, they have brought smart contracts, then implemented multiple improvements on top of that. Now they are bringing agents. Now they are kind of bringing base as an ecosystem, completely different ecosystem, which is cheaper, competing with polygons, abstracts of the world, right? Binance of the world. But still the pricing is going down. So that's impacts us, right? Like that's kind of also like just makes us think that is this gonna be, like is it gonna be worth it, uh, you know so these kind of things are actually like making me think a lot on those sides, especially considering all of this is happening globally. Of course I might be consuming a lot of information, and I'm seeing sadness all over the places from people bagging ETH and then talking about it. But what's your outlook on that side?
Look, like every dog has its day, and we have to wait patiently for it,
Yeah.
because apna time aayega. Like
Right.
our time will come, and it has not come yet.
Hmm.
And most important thing, what I have and like what I say to other people is that they need to be extremely patient, because sometimes being just patient itself will do a lot of things. That's the power of patience. People underestimate that a lot. You need to
Hmm.
have patience and persistence at the same time. Persistence with what you're doing, with your goal, and patiently waiting for that to happen and that to get executed and to give you the fruits.
Yeah.
Because I understand the example of Arbitrum that you gave, and token prices sucks like at 33 cents, and it should be like much more than that. But I think like Arbitrum Foundation doesn't see it that way, because they have like couple of billions of market cap, and they're all like very well placed. Arbitrum is a very good brand and everything, they're doing good. And it's the same with like most of the companies. like prices are falling, but they have like significant amount of money with all of them, so they
Right.
are not really looking at that one. And besides the fact that they are revenue generating projects, because if you see on DeFi Llama, like in the last 24 hours, they're making like 500k 600k kind of revenues per day we are talking
Yeah.
about. So easily they're making like a few millions of dollars revenues per month.
Per
So
month.
if
Yeah.
that revenues are there, they can think about like reinvesting in the project, investing in other projects, investing in their ecosystem, or buying back their own tokens, paying for their employees and all the overhead costs. So
Yeah.
they
Yeah.
really like I mean, like the revenue should always come from the business. It should not come from the token. And the
Mhm.
moment like company runs in that way, the token will catch up on its own. But if
Okay.
there is Polkadot, for example, which dumps a
Yeah.
lot of token. We
Yeah.
have read this kind of news, which is very public. Why? Because they don't have any business. I
Mhm.
don't know like anyone who uses Polkadot as a blockchain. Never heard my friend saying like I'm building something on Polkadot.
Mhm.
So it's been a very very long time. I haven't even heard their name, but I see their posters and everything everywhere. They
Yeah.
spend like $80 million a year just on advertisements and everything. This is not something like which is cool for anybody. But if you see like good chains, like they are really having like very good traction, a lot of people on that, and they're making a lot of advertisements. And token is just a plus for them.
Right.
It's token is just like for them like something like cool to have or something, because a
Mhm.
Arbitrum Foundation, they have like incredible amount of treasury. So
Mhm.
that's treasury in stable coins. They don't count their own tokens as treasuries, but in just
Right.
in stable coins. So I think
Mhm.
yeah, I mean, but at the end of the day, even they are human beings. They want to see their token at $5 or $10. It hurts them, but they know that they are here for very long term mindset, and everything will fall in place in during next few years.
Very interesting. Very interesting. Fascinated. It was absolute my pleasure, Guru. You know, uh, I entirely loved our conversation. I hope to do maybe a couple of more deep dives with you on maybe the risk side, uh, how token is going to evolve, because you are the one who is looking token from an intrinsic extrinsic point of views, right? uh, Value generated from business, value projected by sentiments or public markets, right? So both
Yeah.
the things. Perfect. Thank you so much for your time. It was pleasure having this conversation. I
It's a
absolutely loved
pleasure
it.
to be here, Kush. Thanks for having me.
Thank you so much,
Thank
Guru.
you so much. Thank you.